traders, and welcome to another week in markets. So look, this week has started pretty much how last week left off. So very bullish risk. Market is aggressively buying equities and selling the USD. Now with equities, the S&P has now made 8 consecutive days of gains, shooting for 9 days. The last time that actually happened was back in 2004. So almost 20 years ago, so it'll be a huge achievement if it actually does that tonight. So the main reason why the market is so bullish and buying risk at the moment is a number of factors. The first one is that the yen carry trade unwind is firmly in the revision mirror. Market's certainly not stressed about that anymore. Dollar yen is at least 500 points off the low that we saw when the carry trade was unwinding. So the yen has been behaving itself. The other main reason is that last week we saw a lot of top tier US data, and all that data came out well above expectations. Firstly we had PPI and CPI last week. Basically showed that there was more progress being made on inflation, which was very market friendly. And then we also saw that we had retail sales come out well above expectations, and also jobless claims. So showing that the US economy isn't falling off the cliff yet. So those recession fears have also been put on the back burner at the moment. So the market's sort of in a bit of a sweet spot, and obviously now looking forward to rate cuts that begin in September. Now, this week there really isn't much to do with top tier economic data or event risk. The big event risk that we're going to see is coming at the end of the week when we have Jackson Hole and we have the central bank symposium and we get a speech from Powell. Look, the market at the moment is basically pricing in aggressive interest rate cuts. The market's pricing in at least 75 basis points for the end of the year, so 25 basis points in September, November and December, and an outside chance that maybe one of those meetings could be 50 basis points, and they're also pricing in another 100 basis points between next year until the end of June. So a total of 200 basis points by June next year. So the big risk for the market's going to be is whether or not Powell actually comes out and he doesn't disappoint the market narrative, and he's signalling that the central bank's prepared to start cutting interest rates on market expectations. However, the risk is if he is actually hawkish, more hawkish than what the market expects, and says that look, interest rate cuts are coming, but he still wants to have some flexibility in how aggressively he cuts it. No doubt then you'll probably see bond yields spike on the back of that, US bond yields. The US dollar will also spike, and we might get some reversal in the equity markets that we've seen recently. Other than that, the only other thing that I guess that really could move markets and that maybe we should keep an eye on is that we still haven't had any resolution with the whole Iran-Israel geopolitical risks. Certainly we haven't seen any agreement on a ceasefire in Gaza or a hostage swap, and the market's still a little bit unnerved about potential Iran retaliation. So certainly keep an eye on those geopolitical risks, because certainly that could really impact markets very quickly. Okay, well good luck with your trading, and we'll check back in soon.